So what if I told you there's one single indicator that could do the job of 5? Today, we're diving into strategy number 7, the Ichimoku Cloud. Now, this isn't just another line you slap on a chart. It's a whole trading system, all in one. It's designed to give you the complete market picture in a single glance. So if you're tired of chart clutter, stick around. This is going to be good. I mean, think about it. How often do you find yourself just piling stuff onto your chart? You've got moving averages, support and resistance lines, maybe a momentum oscillator, a trend filter, all just to make one single decision. It's a classic problem called indicator overload, right? And the worst part is when your different tools start giving you conflicting signals. It's just confusing.
Well, here's what's so cool about Ichimoku. It was designed to solve that exact problem. This one system basically consolidates the jobs of a bunch of other strategies we've already covered. You know the Tenkan/Kijun cross? Yep, that's your golden cross signal. The thickness of the cloud itself? That tells you trend strength, kind of like an EMA ribbon. And the edges of the cloud? They act as dynamic support and resistance, basically replacing a system like Donchian channels. It's like the Swiss Army knife of indicators.
But a system this powerful didn't just pop up overnight. In fact, its origin story is just as fascinating as the indicator itself. To understand it, we've got to go all the way back to the 1930s in Japan, long before trading computers were even a thing. So there was this Japanese journalist, Goichi Hosoda, who spent more than 3 decades secretly perfecting what he called the one-glance equilibrium chart. The story goes he actually hired university students to help him manually crunch the numbers, back calculating and testing his ideas on decades of market data, all by hand. After 30 years of painstaking work, he finally published it in 1969. And, you know what? It's still a dominant tool in Japanese institutional trading today. Okay, I'll admit it. The first time you look at an Ichimoku chart, it can look like, well, a bit of a mess. There are all these lines and this big shaded area. It's a lot to process. But we're going to break it down piece by piece until this goes from chaos to crystal clear. Let's start with the first component. First up, we have the Tenkan-sen, or the conversion line. Now, this is really important. It is not a moving average. It's actually the midpoint of the highest high and the lowest low over the last 9 periods. Just think of it as the market's short-term balance point. The slope of this line tells you everything you need to know about immediate momentum. Next, we've got its slower cousin, the Kijun-sen, or the baseline. It's the same midpoint calculation, but it's done over 26 periods, which is roughly 1 month of trading. This line is really the anchor for the entire system. It confirms the trend, it acts as a really natural level for a stop loss, and it kind of serves as a price magnet. So when the price gets too far away from the Kijun-sen, it has a tendency to snap right back to it. All right, now this is where things get really, really unique. This is Senko Span A. It's the average of the 2 lines we just talked about. But here's the kicker. It's plotted 26 periods into the future. This is the faster edge of the cloud and the very first element we've seen in this series that is truly forward-looking. Pretty cool, right? And its partner is Senko Span B. This line is the midpoint of the last 52 periods, so about 2 months of price action, and just like Span A, it's also projected 26 periods ahead. Since it's the slower, more stable line, it forms the foundational layer of where future support or resistance might be. And when you put those 2 future projected spans together, you get the Kumo, or what we call the cloud. And this is just brilliant for visualizing the trend. If the price is above the cloud, you're in a bullish trend. Below the cloud, it's bearish. And if you're inside the cloud, well, that's basically no man's land, a big warning sign to maybe stay out. The cloud's thickness matters too. A thick cloud means strong support or resistance, while a thin one is much weaker. Okay, so now we know what all the pieces do. Let's look at how they all come together to create a really clear set of rules for trading. See, the whole idea is about getting multiple confirmations before you even think about placing a trade. So for a really high-quality, long entry, you need a specific sequence of events to happen. First, the price has to be clearly above the cloud. Second, you need that fast line, the Tenkan-sen, to cross above the slow line, the Kijun-sen. That's your trigger. And third, you look ahead, and that future cloud also has to be bullish. Every single step here acts as a filter, making sure you're only trading when the conditions are really strong. And what about a short entry? Well, it's the exact mirror image. Price has to be below the cloud, the Tenkan-sen crosses below the Kijun-sen, and the future cloud needs to be bearish. The logic is just perfectly symmetrical, and that makes the whole system incredibly robust and actually pretty easy to learn. So we have this comprehensive multi-filter system. But the real question is, how does it actually perform? Let's take a look at the 25-year backtest data, because this, my friends, is where the Ichimoku system really, really shines. A 65% win rate. Let that sink in. 65%. That is the highest of any strategy we have covered in this entire series. I mean, it's proof that the layered confirmation system actually does its job. It filters out the low-quality signals and just dramatically improves your odds. And look at this, a Sharpe ratio of 1.15. Now remember, anything over 1 is considered excellent by professional quants. What this number means is that Ichimoku delivered the absolute best risk-adjusted returns we've seen yet, period. All right, let's put it all into perspective. Here is the full performance table for all 7 strategies we've looked at. As you can see, Ichimoku is leading the pack in win rate, Sharpe ratio, annual growth, and profit factor. It's tied for the best risk to reward and has one of the lowest drawdowns. I mean, by just about every measure you can think of, it is the new performance champion. So here's the main takeaway. Its success is not an accident. It's an all-in-one system that is forward-looking by design. The cloud itself acts as this incredible built-in filter that keeps you out of choppy, sideways markets. This elegant design is directly responsible for its top-tier performance. It's not just a random collection of lines, it's a beautifully engineered trading system. Which, of course, leaves us with one final big question to think about. With its ability to define trend, momentum, support, and resistance, all while projecting into the future, could this be the most complete trend indicator ever designed? That's something to chew on.